The market's a mess, inflation is still a threat, rate cuts keep getting delayed, China is making noise again about dumping US bonds, gold's breaking records, and yeah, average investors are frozen, just waiting for a signal. But while everyone's eyes are on China, something way bigger just happened. Something quieter, smarter, more strategic. President Trump just hit pause on a 26% tariff targeting Indian goods. Not because he's going soft, but because he's thinking long-term. He's repositioning. And the world's second most populous country just moved one step closer to becoming America's strongest trade ally. This deal is about more than tariffs. It's about defense, energy, supply chains. And if you understand what's really happening, you're going to see the market completely differently. This isn't about watching the Fed anymore. This is about watching the board, and realizing the next big move isn't coming from China, it's coming from India. And for investors who see it early, it's a chance to get ahead of a global reset. Before we go further, go ahead and like this video and hit subscribe so you don't miss out on the latest stock market and economy news. This isn't just another handshake photo op. This is a calculated economic pivot, one that's been building behind the scenes for years. On April 22, 2025, President Trump announced a 90-day pause on a proposed 26% tariff against Indian exports. Critics called it a delay tactic, but it's anything but. This pause creates space for negotiation, for leverage, and for something much bigger. A bilateral trade agreement between the US and India that aims to double trade volume to $500 billion by 2030. So, behind the scenes, Vice President J.D. Vance actually flew out to India and met with Prime Minister Narendra Modi. The result? Well, a formal roadmap for the trade deal, locking in energy cooperation, defense coordination, and honestly an aggressive push to open India's tightly controlled e-commerce market to US tech and retail giants. Now this isn't just one-sided. India wants this too. They want US tech, US money, US weapons, and US energy. And the US? We want an ally who doesn't steal our intellectual property, doesn't dump our debt, and doesn't undercut us on every global platform. In short, we want a partner, not a parasite. So what's actually in this deal? It includes increased purchases of US defense equipment, like the F-35. There's also expanded energy exports, especially American ethanol and liquefied natural gas. Plus, there's potential access for companies like Amazon and Walmart to sell directly in India, without the restrictions that have kept them boxed out for years. And it's all happening fast. Both sides know exactly what's at stake. And the market? Well, it hasn't priced in any of it yet. Let's talk money, because this isn't just about diplomacy, it's a market-moving moment. And honestly, the smart money's already circling. First, let's talk about defense stocks. India's defense budget is, well, exploding right now. They're phasing out a lot of their old Russian gear, modernizing their military, and honestly, looking west for the upgrade. The United States is offering top-shelf gear, jets, drones, missiles, you name it. If this trade deal actually lands, defense contractors like Lockheed Martin and Raytheon are set up for a multi-billion-dollar pipeline of orders. And this isn't just some theory. It's already started. The F-35 is on the table, and when India spends, they buy big. Second, energy. India is without a doubt one of the fastest growing energy markets in the world. They need fuel, badly, and America has it. Trump's team is pushing exports of American ethanol and liquefied natural gas. Companies like Cheniere Energy and ExxonMobil could see a major boost if India increases long-term import contracts. This isn't charity, it's strategy. Selling United States fuel abroad strengthens our economy and gives allies like India energy independence from hostile nations like Russia and Iran. Third, tech and retail. For years, Amazon and Walmart have been kind of boxed out of fully operating in India. Strict regulations meant they could only act as middlemen, no direct inventory control, no real power. But now, this deal could open the floodgates. Full market access means massive revenue growth and a population of over 1.4 billion people. If that door opens, you can expect a major rally in United States e-commerce stocks with exposure to India. And finally, don't ignore what this means for the dollar. China wants to undermine the dollar. They're pressuring nations to ditch it, pushing the yuan in global trade. But this deal with India? It reinforces dollar dominance, it strengthens our alliances, and it reminds the world that when it comes to stable currency and reliable trade, America still leads. This deal isn't about tariffs, it's about transformation. And for investors watching the headlines instead of the patterns, this is the one they're going to miss. You can't talk about this India deal without talking about what it replaces: China. For decades, US corporations and politicians bet big on China. Cheap labor, fast manufacturing, massive consumer base. But it came at a cost. We lost leverage, we lost industries, and we handed over the playbook. Now, with Trump back in power and reshoring efforts accelerating, the US isn't just confronting China, we're replacing them. And India is the centerpiece of that strategy. So, China is unstable right now. Their economy is slowing. They're threatening to dump US treasuries, but honestly, they know it would hurt them more than us. Their youth unemployment is through the roof. Foreign investment is drying up. And well, their own companies are being pulled into government surveillance and propaganda efforts. Now contrast that with India. They're young, growing, pro-capitalist. They've got the population to scale and the infrastructure to modernize. And unlike China, they're not trying to dominate the global financial system. They're trying to plug into it. That's why this deal matters. It's not just about exports and imports, it's a realignment, a hard pivot, a decoupling from the China model and a bet on a partner that actually wants to grow alongside us, not replace us. And for investors who've been watching the US-China drama unfold and thinking, where's the opportunity? You're looking at it. India isn't the backup plan, it's the upgrade. This isn't just geopolitical posturing, it's a blueprint. And smart investors aren't waiting for CNBC to spell it out, they're already adjusting. Here's what to watch. First, look at India-exposed ETFs. Tickers like INDA and SMIN give you broad access to Indian markets. If this trade deal lands, and especially if e-commerce access is opened, those charts won't stay flat for long. Second, defense stocks. Companies like Lockheed Martin, Northrop Grumman and Raytheon are already tied to US defense exports. If India becomes a long-term client, that's a new revenue stream that doesn't depend on domestic budget fights. Third, energy. This one's huge. Natural gas exporters like Cheniere and ExxonMobil benefit directly from long-term export deals. And, Trump's policies are pushing American energy dominance, especially through deals like this one. India needs it. We've got it. It's a win-win, and investors should be watching for contracts, terminals, and shipping infrastructure plays. Fourth, US e-commerce. Keep your eye on Amazon and Walmart. If the deal allows direct inventory control in India, that opens up one of the last massive untapped markets. The numbers could be staggering. And honestly, markets respond fast when those doors open. Finally, macro hedges. Gold is still king when global uncertainty rises. But deals like this? They stabilize the narrative, they strengthen the dollar, they reduce dependency on China and re-anchor global trade toward allies. This doesn't mean gold's done, but it does mean smart investors are balancing opportunity with protection, not just fear with more fear. This is where strategy wins, not hype, not clickbait, strategy. And that's the difference between surviving this market and growing through it. Most people won't even hear about this deal. They're too busy watching Fed headlines, meme stocks, or waiting for some analyst on TV to tell them what's already happened. But smart investors, they don't wait. They move first. They read between the lines. And right now, the line between noise and strategy runs through India. This isn't just about trade, it's about trust, alliances, reshoring, security. This deal could be the beginning of a global reset, and the ones who understand that early, they won't just protect their money, they'll grow it. So if you're tired of watching the news after it's too late to act, subscribe now. We follow the real shifts, the ones behind the headlines, and break down what they mean for people who actually want to win in this economy. Like the video, drop your take in the comments, and ask yourself this: are you following the crowd, or are you watching the board? Because the next move just came out of India.